You are listening to ChartingWealth.com for Monday, the 7th of March, 2015. What do we have going on? How did the markets end up on Friday? Well, they continue to move up. Not a lot on Friday, up 0.33%, so a little over 1/3 of 1%, or I'm sorry, exactly 1/3 of 1%. And what do we have? Well, we've got, I think it's 8. We're up to 8. Yes, 8 two-day candles going up on IYY, which is the total market. It's a total market fund. That represents up movement since the crossover on the 16th. That is a crossover on our MACD moving average convergence divergence line. Continuing to move up, derivative oscillator is moved up even higher. The divergence, that is the space between the MACD and the signal line, is as great as ever. So we continue to have strong up movement in the market. We're below the Bollinger Band, but toward the top on the 2-day chart. Now, if we check in with our intraday chart, that is our short chart, our 4-hour chart, we again well above our 2-day trend line. We've been having strong up movement. A little bit of a sideways slide around the 26th through the 1st of March, but since the 1st of March, market has continued to move up strongly. Derivative oscillator continues to heat up. That is where we are as far as the total market goes. Again, confirmed up moves on the short chart and the big chart, the 2-day chart. Now, we go back to our 2-day chart. We take a look at SPY. What is that? That's Standard & Poor's 500. And of course, it has continued to move up above the 2-day trend line. Divergence still as great as it has been up to this point between the MACD and the signal line, and the derivative oscillator continues to heat up. And big strong candles, green open box candles moving up toward the top of the Bollinger Bands. If we look at the 4-hour chart, we see up movement in the morning and the afternoon. The SPY was up 0.3%, about the same amount that the total market was up. So confirmed up moves on the big chart and the small chart on the S&P 500. Last, we're going to look at, as far as our indexes go before we get to gold, we're going to look at the Qs, QQQ. What is that? Well, that's the Nasdaq 100. What do we see going on there? Well, we see on the Nasdaq 100 a crossover later than the total chart and the S&P 500, not on the 16th, but on the 18th going up. We had a little bit of a roll back around the 24th, but for the rest of the time, strong up movement. It was not up as much today, just 0.03%, so literally a tenth of the movement up in the S&P 500 and the IYY. So we're talking about 3/100th of 1%. So not much of up movement for the day. If we check out on our 4-hour chart, what do we see? We see a little up movement in the morning, some in the afternoon, and then a bit of a pullback. Again, maybe the Qs is getting ready to cross over, going down on the 4-hour chart. Haven't seen that happen yet, still above the 2-day trend line. So again, all three of our indexes, strong up movement continuing on the 2-day candles, and our 4-hour candles are still in an up move with crossovers and continued up movement on the derivative oscillator, which has happened at different times, but continued up movement also on the MACD. Now, lastly, we're going to go back to our 2-day chart and we're going to check out gold. What is going on with gold? Well, gold crossed over back on the 16th of December and trundled sideways a little bit and started taking off with some major up movement around the 5th of January, then slid sideways until about the 21st, and then started for its big move. Biggest movement on the 2-day charts was on the 12th of February, and then sort of dropped off, digested those gains, and has slowly built up, and actually over the course of the last 4 days, it has moved above, it's finally caught up and moved above that big movement on the 12th and has continued to gain momentum. The derivative oscillator is still in the negative on the 2-day chart, but the MACD is, of course, been positive since it crossed over going up on the 16th of December. Now, let's look at what's going on intraday. And I did get some nice messages from those of you who were paying attention and getting ready for this crossover. Thank you for letting me know that your virtual trades were going quite well. This is the thing that we keep looking for, is we look for major movement in either direction, and then we wait for a pullback on our short chart. And then once the short chart rolls back over to parallel the same movement in the long chart, that is your buy-in point. And several of you who communicate with me got in on the morning of the 3rd and have watched your positions do quite well. And I am glad to hear it's working for you. This is how we do things. Now, of course, have some concerns and pay attention to what's going on with that drop-off in the afternoon. Gold reached its high in the morning of the 4th, that is Friday the 4th of March, reached its high at about 122.37. Of course, when it crossed over, the low around that crossing time was somewhere in the neighborhood of about 118.42 or so. So that's not a bad spread right there. But again, continue to watch. Remember, we are in a long-term uptrend still. And hopefully this short-term uptrend will continue, but pay attention, take profits when it makes sense. Hopefully you've already decided what you'd like to make and stick with that. At least when you hit those profit levels, cash out half of your position and enjoy what you have made. Continue to watch. Don't let yourself lose it all with the other half that you may or may not have kept in. Maybe you just take your money and run. Again, your virtual money. Thank you so much for listening. That is where we are when it comes to all of the different indexes and gold we look at. Of course, we look at IYY, total market, the S&P 500, the Nasdaq 100, and gold. Gold technically was down 0.16% for the day, still above the 2-day trend line. Thank you so much. We love to hear from you. Follow us on Facebook, Twitter, Instagram, YouTube, you name it. We are there to try to help you. Go to chartingwealth.com, sign up for our daily newsletter, which basically is this podcast. You can get it in video form. You can also subscribe on iTunes and have the audio. Please, if you like what we do, we don't charge you anything. Go to iTunes, give us a 5-star rating. Help us get further and further up on the iTunes rating so that we're able to share our message with more and more people. We love to hear from you. God bless. Thank you so much from chartingwealth.com.